Yo, what is good? Hi TF Mob. It is your boy Booba back with another video. I'm about to do 2-in-1 today. Okay. So I know I didn't upload Friday. That was just because I had work this weekend. And I did mention in previous videos that if I don't have videos go up Friday, expect it Sunday. Sure enough, Sunday I was also busy. So today I'm gonna be doing both the review from last week and the overview for this week. So honestly, the trades you're seeing now, as far as GJ being in profit, I did take this like last Thursday. So I would have reviewed this going into the weekend, but again, I wasn't able to get to that. So now we can see it is now Monday and price is now in favor. So I did hold this trade over the weekend as well, which I don't normally do, but I just like kind of remembered that, hey, if I'm going to swing trade, I got to just hold, and just kind of sit on my hand. And the position was great from where I was taking both these setups. So starting from the top, we're going to look at the setups that pretty much I'll say they worked me out last week a little bit. I'll say that it was an interesting week. So you can see again, I always leave all my trades up from the week previous before even clearing it and going into the new week. So you can see these are all the positions I took on Friday. Friday started off around here. I had seen price create a double top within this channel. So I seen this as a bear flag in that moment. I took a sell down because I was trying to recover my test accounts. I was taking small positions, 2-to-1s, and honestly this ended up playing out way better than I expected, and actually went down near the swing low at the time. So it dropped, it TP. I was sleeping. I was like, cool, but I woke up and seen that it was continuously running. So at that point, once it got down to this level, which was our previous peak weekly low, that was when price reacted for the buy upwards. So we can see here, drops. Could have actually sold it. And honestly, if I had a regular account, I would have took 3-1 on the way down. So probably would have collected more pips, but you can see it completely dropped and even broke past our peak weekly low. And what I mean by that is, again, if we're looking from top down, this is the candle. This is so previous to last week. So the week before last week, this was the candle that was printed. I had the peak weekly low marked here, the peak weekly high zone marked here. You can see price shot right through. So now if I drop back down, see that price created a wick here, and this is where price pulled back up and it created that swing low. So when price was under this level, this zone, I was looking for other sells, and that was a little bit later on in the week. As we can see, it says the 13th of July. So it was on a Wednesday. So on a Wednesday, I was looking for more sales to continue down. Because again, when I was looking at the outlook for the monthly, I did see the potential of it going down to this TP2 zone, because it looks like they're going to collect contracts. So once we broke that level, I expected price to continue down. And I still do, honestly. That bias didn't change, but I'll be watching it closely this week to see what happens. So if I continue to play this, and we can drop back to the 1 hour, let it do its thing. Now, when I took the second sell, price actually reversed. So this one did go in profit a little bit, and then after that, it wiped out. So again, we know this happens. This is normal market behavior. There are times you're going to take the setup, it'll go in your favor a little bit, and then it could stop you out, which is why a lot of times you'll want to break even when it goes in your favor. And a lot of times my rule is I wait for that previous structure to break. So since this was the previous high, or this could be the previous high here, this is where we had price come near this low, but it didn't break it. So that was price respecting. And I personally would have took that full loss. So now price continues now, and this is where the break happens. And if you were continuously watching, you could have found your position right here. Okay. And the reason why I'm saying right here, I wouldn't have taken a buy at this situation, because I get it. Most people may see that this is a a like double bottom because you have this higher leg here. But the reason why I wouldn't take that buy is because I don't know if you guys are familiar. I'm sure a lot of traders are familiar with Q Banks, but he actually even explains that when you do see setups where a candle closes with a strong wick like this previous to the next candle, don't even take that move until that next candle gives you a definitive reason to get in. So this next candle, your definitive reason would have been down here, would have been this 15-minute failure. So price created this high, but on this 15-minute, you had price come up, try to test it, and it failed. And you got this bearish engulfing. So you could have capitalized by selling right here because you already knew you had price create a low high situation. And this is where you could have readjusted the setup. So again, I don't remember actually catching this move all the way down because I don't even think it fully played out, but it was just a move that you could have caught a couple pips on if you were scalping or trying to maximize positions. So here, I think it drops and then you'll see here. Let's keep playing it. Yeah, and it pulls back up. So here was another potential for a re-entry. Okay, because you had this low created. Price had broke past this previous low. Price comes back into the zone and retests that zone. And then it looks like it's coming back down. So again, there was a lot of faking out happening to the downside because price would bluff going in the direction of the sells to follow the high frames, but then would reverse. So look, if you were following the 4 hour here, you would have found out that they were getting out of there because this wick is not a reason to be selling. And you would have known because your definitive reason had to be down on the low frame and there wasn't a reason for that price to continue down. So if we look at the specific candle, like let's go to the 1 hour. Let's go to the 4 hour real quick. We're going to take it back to here. Okay. So you would have had that weird 4 hour close with that wick. You would have went down to your 1 hour and you would have been looking for a retest to this high, right? Because that high correlates to this high right here. Okay. So if you wanted, you could even put a ray right here. Not a ray. Hold on. Horizontal. There you go. Okay. You put that there, change the color, and then you would have been able to identify if that would have been a valid entry setup. So price comes up, looks like it's testing, but not. And the reason why that wouldn't have been valid, again, price closed right above it. When price closed above, that wasn't a test to that situation, which meant that price is now reversing to the upside. So buyers are in control. So that would have stopped me out too, which is actually what ended up happening. So funny enough, while I was testing on the 100K and the 50K, what ended up happening was the test itself. So the 100K, I didn't actually fail it, the second part, but they sent out an alert that I did fail it. And when they sent, all right, my bad, y'all. I bet y'all heard a little bit of that call. That was my job calling, but basically, yeah. Back to GU. Here we have a sell setup that I took that worked out. Price broke its level once it came back to retest. I seen price trail back up, but once I seen this huge rejection, this is where I got in, and that was a bad play because let me do something real quick. Let's drop to the 15. It was a bad play because what ended up happening was it, of course, like on that situation I told you, you don't want to sell into the wick. Like when you see a candle close off with that tail like that, you want to wait for that next candle and then look for your entry. I didn't do that. And honestly, I didn't really know about that more so till now. So it's just something that I'm kind of bringing up for people who are always wondering about like, when is the right time to really pull the trigger on an entry? And again, like right here, price came up, price showed you some rejection. And then, yeah, you could have pulled the trigger there on the bearish, but that's not really a full bearish engulfing. So right here, price comes up, it throws another sell. So this could have probably baited a lot more people. But once you seen the wicks on the close and then price respected, that would have been the time to get out because price was not breaking this structure to continue lower. So this candle would have had to at least close down here before I would have felt like this is valid to get in. But with those tails, it's just signs that buyers are still in control. So price ended up wiping it out. And then this was where price began to actually fall after breaking out of our previous weekly candle low zone. So now that price was trailing in favor, that was just an early entry, and that was where I got stopped out. And then again, price comes back up, and then I'm thinking again, price is going to test this level to drop, and I got in on this bearish engulfing right here, and price completely reversed and then stopped me out. So again, it's all about the math, because you can see every setup I'm taking is 3 to 1. I'm always risking 1% of the account for 3% gain or 2% gain, so that the math adds up. So like, for example, these trades here would immediately recover those 3 losses off that one pair, just these 2 trades. Because yeah, granted, I may have taken a lot of stop outs here, right? Let's just say, for example, I took 3 losses here and I took 3 losses here. All it's going to take is these 2 trades and some patience, because again, these are 3 to 1 setups, and I just have to let them play out, and it'll recover all 6 of those losses. Or, that's just me paraphrasing. They weren't all losses, but that's an example. So here we can see already $500 recovered. And then same here with 200, which is close to 1%. And then we'll, wait for the last 2% to finish out. Again, there's no guarantees in the market. So in this situation, we can see price broke out of my liquidity pool on the 1 hour. So this is where I'm personally going to move this to break even. So now price is risk free. And I'm going to do the same thing with GJ, especially since this took off a lot further. It's like 2%. Most times you want to secure 1% every time 1% has moved in your favor. So after 1%, or at least after 0.5%, you want to move this to break even. Once it gets to about 1%, that's when you want to move your price to move it to 0.5%. You collect that. Once it moves to 2%, then you want to move it up to 1%, collect the 1%, so on and so forth, up until you get to 3%. And that's another good way to trail your stops. But again, you could always do the rule that I said before, is every time the 15-minute goes against you and then closes to go back in favor, you can move your stops there as well. And most times price will just continue to level out. So here price came against, and then once it goes back in favor, you can move your stop right here. See what I'm saying? So there's lots of ways to approach it, but it comes down to what you're comfortable with. GJ, same situation as far as we seen the previous weekly candle start off. Start off with a open right here. It sold off first and then rose really high, then ended right around here after it peaked out. So that told us that buyers were in control by the end of the week. So that way we knew that this became a buy setup within this candle. So here, if I go down to my 4 hour, okay, we'll see I had price in the channel. I was actually trying to capitalize off those sells in the beginning of the week, because this was at the time looking like this. Okay. And price had this high here. Price was falling. Price came to retest, could not break it. Once it couldn't break, the setup was clear. I actually didn't pull the trigger on this. This was one of those setups that was just like, it was iffy to me, because I was like, this could easily just continue up, because it looked like it was kind of respecting this level. But then sure enough, that wasn't the case. It completed the channel and sold down. I think this was a 3. Yeah, that's a 2 to 1. So I didn't pull the trigger on that. I also didn't want to over trade and take too many positions. But then I ended up finding another position down here. Once price came up, broke this level and then created consolidation and then dropped. So I was able to spot those. I didn't act on them or execute on them. But that's the thing. When you trade, again, you want to always be as fluid as possible. Be like water, as Bruce Lee said. Don't ever have a firm bias, and always react to what you're seeing in the present to allow you to basically have better decision making. So that way you're not rigid on your trading. So again, price continues. And if I was like trading all these setups, this would have been a really good 2 trades right here. So think about this, right? I collected 4% out of these 2 moves, and only 1% was taken away. So that was a collective of 3%. That's That could be 750 on a 25K account. That could be 3 grand on a 100K account. So it comes down to what your scaling looks like. So once price started moving back up, this is where I started feeling like, okay, it's going to come at least back up to the top of this channel after testing these low areas. And that's exactly what started to happen. But again, it always comes down to you trusting your bias. So when I think this one actually stops me out. Let me see. I think this stopped me out, but then still continued up. And then I made a clear decision here once it broke out. It broke out this high. And then once it came back into this zone, I started to see the consolidation build up. And then I had marked the liquidity zones. Once I marked the liquidity, I waited for price to lean to one side. And then that was when I decided, okay, I'm going to buy and just hold, because initially I bought thinking this was going to be the actual move up, comes back down against me, throws me off, comes up again. I think I bought here, and then at the same time it was going against me, so I closed out. But then when I seen it respecting, I got right back in. So here you'll see price now start leaning back up towards the highs, and that's the thing. You can either find your entry in this zone, or you can wait for a clear breakout, and that's always better and safer, because then you can find your entry like right here on this type of candle after the breakout. So that's a great way to go about it. But again, like if you're a swing trader, you would have just known that off of the daily, price was trailing back upwards. So after this high low here and this bullish engulfing, you had price still just trailing up, and there was no major resistance level that we hit yet for price to really sell off at. So it's not till about maybe here that we should see price start selling off. That's why I put my take profit up here. And you can see this is where institution got involved to push price down. So we'll see. The other part that played a huge factor in me holding was also knowing that, like, if you're looking at the weekly, this looks like a high low. Like this looks like a bottom was created here, and then the high low was created here, because this wick was not broken. And now it looks like price wants to come and wipe all this out. So honestly, if we break this level, I might even still look for buys even higher up, and maybe even up to the weekly high. Because remember, on the weekly candle, I always mark our weekly high, which is right about right here where this green line is, and I try to put it near a flat level. So this is at 169 flat, and then the peak weekly low. So looking at just this one leg of movement, this is where I set my peak weekly low. And then as price moves in between this range, I can know when the monthly itself wants to make a move. Because when the monthly is ready to make a move, this candle will be probably up here by the end of this month. It'd start off selling very heavy through a very large wick. And we could even get a close around here. And then next month could honestly do the same thing, start by selling and then start buying by the end of the month. So we'll see how things play out. But over the course of time, I do see price making a substantial move to the upside, a very substantial move. Like I'm talking about all the way up to maybe 188 flat over the course of this year. So you got to keep in mind 12 monthly candles is a year, and we can count 12. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. That small little range, this small range of movement is a year of time, a whole year. So you got to think like you want to capitalize on how those individual blocks are moving. And that's how you really want to get involved down on these 1 hour and 15-minute candles, because it's a lot more movement going on. There's a lot more opportunities. So down on UJ was just wilding out. I ain't even gonna lie to you. UJ has been throwing me off for the past like 2-3 weeks, because it's been buying and I've been knowing it's supposed to buy, but in the fashion it's been happening has been throwing me off. So here I look for a sell opportunity because I'm expecting price to retrace to the zone after the breakout. It only comes so far. It engulfs, continues up. Now it comes back down, starts to kind of create a double top situation here. And once I seen that, I was like, okay, I'm expecting price to sell. Well, actually it sold off right here. So that sold off, and then I got in too late. Okay. This is a prime example of getting in too late, because this is the move. This is the wholesale move. At this point, anything as far as buying indication is valid to really take, because price has exhausted itself. So this was in a way, the retest, right? Of the breakout of this situation when it broke out here. This is in a way its own retest. Once price came down, price got out of here. Okay. Create this high, create a high low here, create a high low. and then started consolidating, right? Moving sideways. Now price bought off my swing low at the time. And then this is where it just kept going crazy. Like at this time, I honestly was like sleep. I was sleeping. I was just like, I left UJ alone completely because I was like, I don't know how much higher this is going to continue. And I've mentioned before that, yeah, we can't see price right over to the left here. Mind you, this is way back in like almost the 1900s, 02, early 2000s. But there is price up here. There is price up back up here. So we just can't see it on this broker. But that's probably why price is way up here and it's near the flat levels that we marked. So that could have been extra money too. But again, I was too firm on the bias of price needs to come back down because of how overbought price is. Like this is ridiculous. There's a lot of buying. So I don't know if it's gonna breathe anytime soon, but I'm just gonna kind of leave it alone and play things by ear, just by looking at the weekly candle. So looks like this week is starting off selling, and let's see. Yeah, it looks like we have some buying. Might be honestly, these AJ and GJ might be buys all week. GU, this could become a buy if we get a bullish engulfing here. If we get a bullish engulfing on the end of this week, yeah, this whole situation could be buying up. But we'll see. It could test this level and then continue to sell. And likewise with AU and GU are kind of like twins. So as far as the analysis, I'm going to quick run over the adjustments, and then you guys can kind of just watch how I go about that. Here, let me see. All right, so we'll start from the weekly. Okay, we're gonna do this again. And I forgot about a tool. There's a tool I used to use like way early the beginning that I didn't show too much because again, it was part of Real Rise Academy's information and I didn't want to like disclose all their stuff, but I'm going to start using it again because it definitely helped with my entries back then. And it almost certain is going to help with them now, which was the premium and discount tool, which allows me to know when price is at a premium or at a discount to know when I'm ready to buy or sell. So again, now we changed our zones for our weekly, previous weekly high, previous weekly low. We can drop to our daily. We can remove this green line because that was just to try to find an entry. Take all this off. Clean all this up here. I like to clean all of that. All of that. There we go. Okay. And we'll go back up to weekly really quick. The reason why I'm back up here is because there's a new leg, okay? Remember, I like to trap the legs of the weekly because I like to keep the movement pretty concise. I know there's a flat level up here. Remember, I said once we break out of our weekly low, this is where we're looking for the potential continuation. So if I go back down, you can choose to like add a second line here if you want, or readjust this flat level. But again, they're flat levels. I'm kind of keeping them there because they're levels that banks are going to watch. And if price is going to close back within this bank level, I can only say it's safe to say it might continue buying. And that's just predicated off what I'm seeing, because here we have a low and we have our high low created here. This is why price is coming up to this level, and then we'll see how it reacts. Go down to the 4 hour. Okay, this is where we'll allow ourselves to find our swing high and swing lows, because most times it's just the leg. So it'll probably be like right here and right here. But let's just drop and see. So swing high. So actually it will be here. Okay. Swing low. Boom. Swing high. It's gonna be here. And the reason why I'm doing this low instead of this one is because price has not closed above the swing high yet. Once price closes above it, it looks like it's about to, but once it does, that's when it's considered this, whatever gets set is now the new official swing high. So this could actually be a buy setup even that you could get into. And what I would do is mark this as an entire liquidity zone because price is just consolidating near the highs. Quite frankly, I'm just gonna leave that swing high there, and then we'll do liquidity, boom, okay. So now we know you can even find your entry probably down here. Okay. But yeah, so as far as that, now we have our swing high, swing low. I'm going to show you guys that premium discount tool. I don't know if it's still set. It is a clutch. Okay. So we know right now, when price is below 50%, it's at a discount. Okay. So price came to a discount here. This became a buy opportunity. Once you seen the bullish engulfing, you could have gotten on this next candle. Just, you know, whatever floats your boat. But now price is at a premium. So I'm going to write that in. Okay. Like this premium discount, right? So now whenever price is back in a discount while we're trending up, that's what I'll be looking to pull the trigger on buys. And now we, of course, like I said, we know this is the liquidity zone. So we'll just be watching. Go down to GU, do the same exact thing. Start from the weekly. Okay. Go ahead and readjust, zoom in. Can adjust our line. So you can see here, this was where our previous peak weekly high was. This is where our previous peak weekly low is. This is where our new ones are. Okay. And when I say previous peak weekly high and low, I'm talking about the exact, like the candle itself, not the leg. Because if we're talking about the leg, this is the high, and then this is the low for the weekly. You see what I'm saying? But if we're talking about for the candle itself, the peak weekly high and lows will be the top and bottoms of the wicks. So here, hold on, guys, hold on. Sorry, did not expect this many. All right, that's my bad again, y'all. I'm back. I might get a call too anyways, but I just cleared up while I was on the call. And here I have my new levels marked from the weekly as far as the peak weekly highs and lows for this next candle. So we see we're trapped here. Price started off selling. We had a quick buy up, and it's only been about 2 days into this week. So if price decides to continue and drive higher, we will know because the structures will be formed on the lower frames. This daily, I'm going to wait for it to break off. So at 4 o'clock, that's when I'll kind of look for a decision on what I want to do next as far as what's going to happen with that next daily candle. But with what's going on now, even if you did want to catch a piece of this move, you could actually get into this setup like right here, right? And you could take this up to one of the points of interest, which would be like within these two zones, and then trail your stops. So this wouldn't be a bad setup to take now. But again, if you want to be patient, play the waiting game, you can wait for that daily break off and then just kind of get involved there. Because this can only go so much higher, or you know, you just never know. I'm not even going to say anything. You literally just never know. So with this, we have one liquidity pool. Again, what I like to do when it comes to liquidity pools is find the tops and the bottoms. This is just a larger one. Okay. Liquidity and boom. Remember, double top here. Okay. This is a really large range. That's all it is. You can, of course, do diagonal. It is a diagonal movement in a way. So yes, you could do the trend lines up and then wait for that breakout. That's totally okay. You know, that's honestly, if you even wanted to, you can just do it just like this. Boom. If you want to be sharp about it, you could go like this. You know, whatever works, whatever works to help you visually. But now we have the liquidity pools down here that we just left. So again, I like to mark the swing highs and lows. So if I go to the 4 hours, sometimes it's not easy to find it on your 1 hour. So it's just easier to know, okay, this was our swing low probably down here. Actually right here. Because this was really the low that led to this high breaking. If I go to the 1 hour, we'll know that our swing high was back up here because this swing high led to this low breaking, or this swing low breaking. Actually, let's look at it in more detail, okay? Because I don't want to be too lazy about this. So here we have the push down didn't break. Price comes up, creates a high, right? Comes down, still didn't break. Comes back up, creates this low high. This low high right here in this zone pushed down and broke not only this, but this as well, which was our old swing low, which creates this new swing low down here, okay? And makes this our new swing high, okay? So for that very reason, this being our swing high, if we pay close attention, this swing low led to this high, or excuse me, let's see, this swing low, right? Because it's above here. So when price create this low, create this high low, high, high, low, high, high, low, high, higher, high. And then it created a low and then a lower high and then a low right here. So this is why I'm looking at this zone as being the swing low, because from this low, right, price continued and never came back. And when it pushed up, this is what led to this swing high right here breaking. Okay, so this swing high that eventually got broken way over here, right, was broken by this swing low right here. Okay, so because this was the swing low that broke it, we have this, which now becomes the flip zone. Okay, the flip zone means after the breakout, you can look for that potential re-entry to continue in that favor or in that direction. Okay, so that's how I'm marking that right now. And then you'll see that after the swing low led to this breaking, the swing high that was created. Right, the swing high that was created was actually here. Okay, from this low, and then price created this new swing low. Okay, and then this swing low broke this swing high, and then also wiped out this previous high. So when price continued, okay, I'm just kind of showing you guys how I'm able to figure out what swing highs and swing lows are. Most times, like, you could almost deem this as an internal break of structure within this leg. But again, because we have this as our old swing high and now this flip zone, our new swing low is able to be created in this space, which leads to this high breaking. So whenever this broke, which was like right over here, we have this up here, and this would be our swing low. Okay. So now you can kind of see our swing high is broken again. This creates our new swing low right here. Okay, and this is why I said this is a valid setup, because it's a breakout, and then you can see the retest can happen here on this candle. So this is the bullish engulfing, and now you can see price is starting to trail, and this is where I would look to get out if price were to start reversing. So that's a valid entry. I'm gonna play it calm for now. Again, I'm not too rushed on anything, because once I'm in profit on other setups, I try to kind of play other positions by ear, and I want to be more and more selective so that I can actually continue to stack the profits. So with that, I'm going to delete that. I'm going to delete this. Okay, and I'm going to delete this. Wow. Okay, and now that we have that, we know that from our swing high to swing low, we can do our premium discount. Price was at a discount here. This is where you could have bought, and price takes off. Again, you can even line this up to the actual move here. Excuse me. Boom. Okay. So yeah. So we can see price is trying to head in complete wiping out all this liquidity. Remember, when price is going one way, we're attacking liquidity. That's what banks are trying to do. They're trying to collect their money back. So we can see here, this is where they're trying to head. Okay, so as far as GJ and UJ, I'm not gonna really break these down, just because like everything besides like adjusting my swing high, swing lows, there ain't really much else to be doing when it comes to this. This looks like it might be a runner, so I'm just gonna kind of keep an eye on it and just see how things go. We have our swing high that is up here, and our swing low which is probably back here because this low led to this previous high breaking, right? So we can actually change this to swing low. Okay, and then create this peak. So now we know price is just playing in that range. And then you can just kind of keep looking for internal structure breaks to keep finding re-entries into the same move. Because remember, when you get these big moves like this in one direction, that's the swing move actually playing out. So once that happens, like a lot of times you just want to keep stacking your orders because it's rare to actually catch the bigger move and they don't play out all the time. Okay. So here, okay, let's go back real quick. Let's put that back. We have a swing high here, the swing low was previously here. This swing low led to this high getting destroyed. So if we're looking at it, right, this swing high is here because that's where price peaked out from this swing low. Okay. And then now you have this situation like this. Okay. Which is completely valid. I also did throw some alerts. If you have like premium trading view, you can throw some alerts on your swing high lines and swing low lines. And that honestly will also help you tail price throughout the day. So the only thing I really got to adjust on these is, again, for these two, I'm going to go through my weekly zones. So of course, we're just going to move our blocks to here. So this, instead of this being down here, it's going to be right here. And then up here, like that. Okay. So now you can see we're above the zone. And now that we know we're above the zone, drop to the 1 hour and you can kind of play ball off that. But again, I'm going to do a lot of cleaning up. I don't have a lot of time left, so I'm trying to move quicker than normal, especially since I had to answer those calls. But let's see. Okay, UJ, I think I might mess with this now because this looks more clear cut than before. This swing high got destroyed, so the new swing high is way up here. Okay, it peaked out right here. So from this low, that was our swing low. We can move this right here. Okay, price went ham, destroyed. And honestly, you could even say after this was broken out of, this created this new swing high, and then this was the new swing low. So it, you know, it's to your level of detail. To me personally, I like to keep things really concise and like squeezed in. So if I can keep things like in a specific space, I prefer that over having larger gaps, because then you're able to actually able to read your lines in a way that you can find those small moves a little bit easier. And again, the small moves aren't really always the best route to go, because when you get into consolidation traps, like when you get in consolidation traps, it helps, but when you're out of them, it can really mess you up. So it, you know, it's to the trader's preference. If you like to swing, then yeah, you can have larger legs and try to keep your anchor points pretty accurate. If you're trying to scalp, you can try to squeeze your positions and your lines to kind of find moves a little quicker, which is okay. You just got to be able to read what's going on. So here we can see prices just falling, and then we have price creating a double top, which is creating another liquidity zone here. Remember, I like to, if it's like this, I like to put it at the wick, because then I know what we're going for and what we need to break to keep moving in one direction. Okay. Get it? One direction. So boom. Okay, we got liquidity top. And that's about it. That's about it. And honestly, this looks like a sell setup to me. I look at the 15. Looks like a sell setup, but you know, just give it time and let it play out to figure out your entries. But yeah, that's it. I'm gonna wrap this video up. Again, huge shout out to Real Rise Academy. I see them doing big things out there. I know they're trying to get the group banded together, so that's super dope to see. They've definitely helped me out in this journey of trying to figure things out. I've definitely found a lot of dope information through the academy, so if you guys definitely want to check them out, go down the description. They'll have their link there. You can always sign up through the referral link I have as well if you want to learn more directly from me and kind of get some lives out of me there too. Because I'm trying to like inch towards getting to a live schedule. It's just that I'm not set up yet, and by that I mean there's a lot of other stuff coming. So again, any feedback would be greatly appreciated. You can leave that in the comment section so I know what to improve on. If you guys can leave a like, subscribe, and share the video to anybody you feel like needs this information, that'd be super dope and helpful. And again, like I said, there's more things coming. So hope you guys have a great day. Hope you guys have a great week. And let's go out here and kill it. I'll see you guys on Friday. Peace out, ITF.